Hi, this is Malvina Fredson-Cole, your loan officer, and I'm just here to tell you about what's happening with interest rate in 2022. And this is a forecast of what the experts are saying will happen or is happening right now. Now, we all know that interest rates are going up, and that is because, let me tell you an economic tip. Whenever you see inflation go up, interest rate is right there with it, and it's going to go up. And so that's what pushing it up. There are other things that push interest rates up, like the bond prices, maybe job markets, all these things. But mostly right now, the economic environment, we are watching at inflation. Now, the Federal Reserve Board, they are going to play a huge part in making sure that inflation doesn't run amok, right? Because, and one of the reasons why when inflation goes up, interest rate goes up is because obviously if you are investing and you're purchasing, just imagine you're purchasing mortgage bonds. It is fixed, right? When you get a loan, it's fixed for like 30 years, 20 years, 25 years. Now, if inflation is going up, that means it's eroding the buying power. That doesn't, and so the investors are requesting higher interest rate. Okay, cool on that. Now, the Feds are going to play a huge part this year in regulating the inflation. And obviously, if inflation goes down, guess what? Mortgage interest rate is going to go down with it. Now, if we look back at history, like I think in the 1980s when Volcker took over as Fed chair, what happened is inflation was, I think, almost at 18%. And interest rate was around 14%, if I am not mistaken. And I'm going to check it because I don't want to give you, yes, interest rate was at 18%. Wow. Now, can you imagine that? We're complaining that, oh, interest rate is shooting up. It's going to be over 4%. Interest rate in 1980 was all the way up at 18%. So what happened? What he did, he hiked the Fed rate up. Those are monetary policies that the Federal Reserve Board have in order to control the economic environment in the US. And so right now we know the Fed rate is at 0. Wow, he had to hike it up, and that made the inflation go down, and rates went down from 18% to 12%. Wow, 12%. It is still high, right? But it did drop. Now, in the 1990s, Alan Greenspan was in the same boat when inflation started going up. He acted quickly, though. He did not wait. He acted quickly, and he hiked the Fed interest rate by the same amount as the inflation. I think it was 1.75. And what happened? Obviously, mortgage interest rate also dropped as inflation dropped. There are consequences to this action, though. When those things happen, when inflation drops and they use their monetary policies and all that kind of stuff that they have, it pushes the country into a recession, and it has another effect on S&P, like the stock prices and everything. So during both of those in the past, when the Fed hiked the federal rate from up and inflation goes down, the stock market loses its value. Now, let's see what's going to happen with us. Right now, you've been hearing that the Feds are going to taper, they're tapering, and now they are going to do it soon. Maybe as soon as in March, we don't know, but they are going to do it. They are going to stop buying mortgage bond and treasuries, and they are going to hike the Fed rates. How aggressively and how fast they do it, we don't know, and that is going to help inflation to come down and mortgage rates to come down. However, they also can decide not to reinvest some of the bonds, the mortgage bonds that is coming due. And that, if they decide not to reinvest, that action will actually can hike up interest rate a little bit. So you see, they're juggling a lot of things, but it's not as easy as that because they're wild cards. A few of the wild cards that we know, yes, COVID. Yes, COVID has made supply chain issue, the semiconductors, all this thing, and what's going on. And, is there going to be another strain? All these things have, it's going to put a spanner in the Federal Reserve Board's monetary policies and how they're going to manage inflation. Another thing that can also affect how they're going to manage the inflation is the federal government. If they're going to have more stimulus, if they do all these things, it's going to further increase inflation. So we're looking to see how it's going to unfold. But until the Feds make a move, they're speaking about it, it's coming in March, in May. We don't know how often or how aggressive it's going to be and all these other factors, but rates are going to continue to go up, unfortunately. What does that mean for you if you want to purchase a home? It means that purchase a home. As long as it's within your budget, purchase a home. Don't try to time the market, because these are just what we're looking at, and rates can continue to go up until the end of the year if something happens or not. So what you should be looking at when you're buying that, don't try to purchase lower interest rate. Purchase the par, means what is the par at that time. Try to keep the cost of the loan low. So in the event that rates do go down again at the end of the year or early next year, whenever that happens, you can refinance and you haven't spent too much on your loan. So that's what I have for you. If you have any questions, you need DM me, send me your email if you want weekly updates on what's going on with the Fed funds and all this kind of stuff, job market, inflation. I have a weekly newsletter that I send out and you can be on it. So you can DM me Instagram Malvina_Fredson-Cole, or you can text me your email address at 48-963-3776. I'm Malvina Fredson-Cole, your loan officer, NMLS number 1982145. Have an amazing day.